Morning, Steve Freed in Chicago with the morning grain comments. Well, it's a cold walk to the office this morning and pretty cold around much of the Midwest. Get colder tomorrow and should be snowy and maybe freezing rain for the weekend. And then next week we have another shot of some cold temperatures. So the forecasters who were talking about the northern third of the Midwest this winter being cold and wet certainly have been correct. The 6 to 10 day outlook calls for cold temperatures and maybe below normal precip, and the only warm spot in the country is down in Florida, so let's all go there. But as far as the grains are concerned, overnight prices are lower. I think that two things. Number one, it looks like there's a better chance of rain across Argentina and southern Brazil next week. That's a timely rain and should offer resistance to the bean market. But secondly, today is the Fed meeting, and they should raise interest rates 0.25%. So most commodities are lower in front of that Fed meeting. U.S. stocks should also open lower. When we look at the technical side of the market and look at the monthly corn chart, it looks like a very positive chart. We've kind of had an outside month closing higher, at least trading higher. And so that and a wheat chart looks like it's bottoming, could bring in some fund buying at the beginning of the year. We're already hearing some index buying coming in, buying commodities on the threat of inflation. Soybean market, soybean meal, soybean oil, all trading above value. A year ago, prices were lower than this, and the outlook for the carryouts were about the same. The big difference was that South America had a weather problem. We took advantage of that both on the export side and the crush side, and our carryout that last year was forecasted at 480 actually dropped down to 190. So 3 years in a row in which the USDA has overstated the December carryout because of something that happened that increased our demand. We also note that fundamentalists, though, still feel that if you look at the average prices for 2017, they estimated corn futures at 330, wheat 425, which is about where we are right now, and beans at 950, which would be almost $1 lower than where we are right now. So anyway, fund yesterday, sellers of beans, meal, and oil, they bought corn and wheat, relatively small volumes though. We know the Dalian exchanges, all their contracts were lower overnight. The Malaysian palm oil futures started lower and then traded higher on some better than expected data from Malaysia. So lower commodity prices in front of the Fed meeting and some rains next week, possibly in Brazil and Argentina, should offer some resistance to the markets today. If you're up here in Chicago, keep warm. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.